Hi everyone, let's look at my Elliott Wave scenarios on Bitcoin and some trading psychology, which is what I want to start with, because you always have to ask yourself the question, what makes most people lose? It is a well-known fact that about 90% of the traders in the market lose money, and it's also well known that starting traders, the first thing they learn is using trend lines and looking for patterns on the chart. Now, if you pull a trend line at the lows and one at the highs, what do you see? You see a triangle. Now, I've seen this triangle all over the internet. Now, from an Elliott Wave point of view, I do not agree with this triangle over here because of the sub-degree waves inside this triangle. But let's not think about Elliott Waves. Let's just think about trading psychology. What happens over here? You have the breakout traders that now think the triangle is broken to the downside. So what do? They enter a short over here, stop loss somewhere in the triangle, and they are looking for downside. Besides the breakout traders over here, you also have many traders that likely went short in this range. And what did they do? They put their stop losses above the triple top that we have at the highs, expecting downside. So what's the highest probability? What makes most people lose? Will price continue to the downside? Breakout traders are winning, all the shorts in the range are winning, or is it more likely that price might move to the upside? Now, only answering this question of what makes most people lose and thinking about trading psychology, for me it makes a lot more sense if price is going to move to the upside and not the downside. Of course, it can, by the way, just go down, take the liquidity at 27.2k because we have a couple of lows before then moving to the upside, taking the liquidity at 30.5k where many stop losses are likely sitting over here because of all the shorts in this range. So you stop everyone out and then you move to the downside. Answering the question of what makes most people lose, this is the scenario that I am looking for at the moment. And that is why my Elliott Wave scenarios are similar to what I am showing over here, which is this scenario over here. So the whole triangle and the trend lines are now gone. We now have Elliott Waves on the chart, right? Where we are looking for a 5-wave structure in a wave A, a 3-wave structure and then a wave B, for then continuation to the downside in a wave C. And if you think about the triangle I've just shown you, we have the breakout over here, maybe moving down a little bit more, then move to the upside to finish this wave B, hitting all the stop losses of the triple top that we have at 30k, for then a move to the downside in an ABC zigzag, which is a 5-wave move. If we then look at the target over here, or what actually happened is we took the low over here with this candle, so we have a little bit of a reaction. Now, I wouldn't mind, of course, if price goes to the upside, absolutely fine, but we do have some interesting support just below where price is at the moment, between 27.6k and 27.2k. Now, 27.2k, as already mentioned, has a couple of lows for maybe a bit of a liquidity grab for then a move to the upside, but we also have the weekly over here, the 886 taken from the low of A to the highs over there, and we have this 1-to-1 taken from the high of this A to the low of W to the high of X. So this is an interesting area of confluence for then potentially a bounce if price is going to move to the downside. I'm definitely keeping an eye, by the way, on the liquidity grab of 27.2k, but this area in general is going to be an interesting area for then potentially a reversal to the upside. So if we then also look at the CVD, it supports this scenario as it stands right now, because if we zoom out to the 4-hour and we actually look at the divergences that we have bullish divergences. So we have the low over here, which is the low of wave A, and then we are looking for this 3-wave structure, right? So we have the low of A and price is making higher lows, but on the CVD, it's making lower lows, which is a bullish divergence. So we have a bullish divergence on the CVD between this low and these lows over here, where we have higher lows but lower lows on the CVD, which therefore means that the target for a bullish divergence is taking the high of this wave A at 30k. Hey, that's interesting, because that's exactly the scenario, at least the preferred scenario from an Elliott Wave point of view, and it is also the scenario that works with a fake out of this triangle, where this then is the breakout low. The fake out basically is everything happening in this area over here. for then a move to the upside, taking the liquidity, and then a move down. Bullish divergences play out the moment this high is taken. So therefore this scenario, with a little bit of trading psychology, can be very, very interesting indeed for then a potential long scenario over here that we have entering somewhere in this white target box, stop loss safely below, for then a trade to the upside. Of course, price could already go up, but then again we have some interesting confluence here. You have your plan, your strategy, right? So you just trade whatever you like to trade, but then looking for a move to the upside. And then once we are at the highs, we have the triple top. We have a target box as well between 30.2k and 30.4k for a little bit of additional resistance over here, for then potentially a short setup where you enter the short, stop loss above the invalidation of a zigzag, which is the high, the beginning of this wave A in an A, B, C. You do not want to see the high at 31k taken, else we have to think about other corrective structures, which at the moment are not relevant to explain. And then we expect a move to the downside. So this is very, very interesting. This Elliott Wave scenario in combination with the fake out triangle and some trading psychology, always answering that question, what makes most people lose? Now if you then look at the lower time frame structures and I move to the 1 hour time frame, we have been looking at this ABC over here, which hit the target area, which is the white box that you see. In this then being an A zigzag, followed then eventually by a 3 wave in a B, and then another zigzag to the downside in a wave C. Most common target for a zigzag is between the 1 and the 1.236, which so far has been expected. We did take the low as mentioned before over here. As you can see, we wicked below this low, closed above the low, and now at least range for a little bit, but I wouldn't mind another dip to the downside. But honestly, if price just moves up, that's no problem as well. But I would like actually a move to the downside where taking these lows over here, like the triple low at 27.2k, would be very attractive indeed. So then price has to dip a little bit further. A rare target for a zigzag is the 1.618 all the way at 26.9k basically, which is even far below the lows that we have over here. So I don't really think that if price is going to hit this level, it's likely not an ABC anymore, but at least price can move below the 1.236 before moving to the upside. And another scenario on the low time frame is that we have an ABC over here, which then is a 5-3-5 wave structure, which also means the yellow count over here is changing a little bit from my preferred scenario, with this then being a 3-wave W, 3-wave X, and then an ABC zigzag in a wave Y. Most common target area for this scenario is the white box over here between the 1 and the 1.236, which sits between 27.5k and 27k, which also, and there we go again, includes that triple bottom at 27.2k. So this is very, very, very interesting in my opinion, and this is something that I'll be looking for. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I see you at the next one. Bye bye.